Pallavi Abbott, how are you?
Good, Joe. How are you?
I'm good. Welcome to Brokers and Brews,
Thank
where
you
of
for having
course
me.
we are bringing our brews to the table. So, Pallavi, I got to ask first, what'd you bring?
Well, this quarantine has really changed a lot of things, and one of that is I'm
Oh
drinking a
my
beer.
God, I thought for sure it was going to be a wine.
We're out of wine,
Ah,
so
Costco's not, so you might have to make an essential run.
you bet we are.
Well, I brought a Sam Adams cherry wheat, so
Right. Cheers to
cheers to
that.
you. And tell us, before we get started, who's Pallavi? How'd you get into the mortgage world? And how's it going so far?
Okay. So I'm a mom of two little boys, and I'm a former journalist. Back in India, I was a journalist for the publication, and then recently I started to write for a digital magazine as well. So my full-time job is I am a mortgage loan originator with Direct Home Mortgages. We're a company based in Troy, and but as a creative out, I continue writing for a digital magazine as a freelance writer. So yeah, and
Are you
all
allowed
my
to say what magazine?
was that?
Are you allowed to say what magazine?
Yeah, it's called the Indian Scene,
Okay.
and we basically a lot of profiles for people who are, who've been in this country for a while and they've established themselves as absolutely distinguished professionals. And just, to put things in perspective, when they started out their journeys and for other people who are starting out their own, the hardships. And I love being, a part of knowing someone else's journey.
Yeah.
I love to learn from that, and I love to impart and add to other people's journeys. So when I'm doing mortgages, I am literally, I'm trying to be a part of their journey in a positive way. And so far, it's been really, really fun. I mean, I'm blessed, and I've come across some great people, and they're all. I mean, you're just trying to make a difference in their lives, whether they're saving money or they're learning about how they can be financially more sound. It's very rewarding.
Yeah. No, that's awesome. I didn't know about that part. So it's good to hear. And so you're with direct mortgage or direct home mortgage?
Direct home mortgages.
Okay. And I know because we've talked that didn't start off in your profession saying I want to be a mortgage person, but something happened, and without being specific as far as that exact company, what got you into this business, and how much do you like it or maybe even dislike it at times now that you're here?
I love every aspect of it. I won't lie. I mean, some days are frustrating, like all of us professionals, but for most part and every day, it's a beautiful experience. Um, yes, the story behind how I got into it, without taking names, we bought our house 4 years ago, and we were building, and the builder's lender, which is typically a go-to when you're building with any builder, they kind of it was not a fun transaction, let's just say. And
Sure.
at the time, I had no idea, but I knew that if ever I was going to get into this industry, my entire objective was going to be educate as you go along, and that's just it's a very organic way of building relationships because you're genuinely uh, passing knowledge to people, and I think knowledge is power. So
Yeah.
that's how it all started.
Yeah, somebody recently asked me like what would I want to be known for, like if there was like a legacy or something like that, and I said, for me it's knowledge. I want to know that everybody knows that I'm well versed and pay attention, and that my specialty obviously is real estate, but that I am in tune with what's going on in other
Right.
worlds, whether it be stock market and mortgage, or even just you know research on COVID-19 and SARS and stuff like that, right? Like, I don't want to just kind of sit back and read Facebook posts or Twitter feeds. I want to actually get ingrained and listen to some podcasts and read a couple of papers. And, I'm not a doctor or not going to ever be one, so I'm not going to get too into it, but I want to know something. So,
Right.
so you're right. Knowledge is like so crucial. And
It
so,
is so empowering. It really is. And the and the times we are in right now, it's like you cannot get a bigger, faster lesson with how things are changing, how rapidly they're changing.
right.
So yeah, so it's been quite interesting. I know that real estate market. I mean that it's changed completely, and like we were talking earlier about virtual tours and
Mhm.
everything becoming virtual. So how's it at your end?
It's still in our market, here in Metro Detroit, there's still an average price point somewhere around 200 to 230,000, give or take, depending on what city you're in. And those price points are still pretty much on fire. Um,
Wow.
I wrote an offer for somebody last week, and they were one of four offers. They did not get accepted. I've seen some other homes in that below $300,000 price point come on the market and come right off. And so, the market is slower, and I want to be clear that it is not what it should be for April going into May. But it is not dead. We have not stopped working altogether. And like you said, virtual. I mean, we're meeting clients the way that you and I are talking tonight. We're
Right.
seeing homes the way, it's like I would, see the whole room that you're in. You would show it to me, stuff like that. And then we're recording things or having sellers record things, and we can put those to YouTube and put them right in the MLS. And that's clearly not the way that we want to do business for the rest of our lives, but it's getting us by for now. um, can you do mortgages outside of Michigan?
Yes, we're licensed for Texas, and we're in process of getting licensed in other states as well.
So have you worked with anybody in Texas so far?
Oh yeah, absolutely.
So like, I mean, that's, we're talking about, without getting political about it, two totally different mindsets when it comes to where we're at in this pandemic and what we can do business wise and things like that. I mean, you have a whole one governor who has said we need to reopen the state. You have another governor here in Michigan that says, I'm not sure what we're going to do, but we're going to discuss it and make that plan over the next week, and tell you on the 30th of April. So
Right.
like, what do you see difference wise working with people in the two different states, maybe before and now, when it comes to
Um,
business?
and that's a great question, Joe. But I think people are the same across states. Especially in our industry, right? Mortgages, like everything going virtual. Thankfully, everything is getting automated. Stuff like mortgages, especially in the wholesale sector. That's something that we're able to. We transitioned long ago into doing this, remotely.
Hmm.
So I think everything in terms of the operations part of it, I don't think we've been. It's not a constraint for us to be working from home with the stay-at-home orders. But I think the biggest limitation for our industry, which we're seeing, is of course that the clients themselves, their employment is the biggest limitation. People who are getting furloughed, they lose, them losing their jobs, which is one of the biggest requirement for any mortgage transaction to actually, go through. And
Sure.
our wholesale section of lenders, they've been absolutely phenomenal. They, when people started to lose jobs, and everybody was working from home, it has been a very smooth transition, even when our underwriters and all the other team at the lender side is working from home and almost resetting themselves to a non-office environment, right? And so that has been great. Is like they've done everything in terms of overlays to have added security that the loan is not, it doesn't die. And so if there wasn't an HR to actually verify somebody's employment, they found out alternative ways of doing it. But to your question of how different it has been in dealing with people from the two states, there's absolutely been no difference. I think people politicize things a lot more than it needs to be. And at the end of the day, I think all of us were trying to just have a family and, make a living and just enjoy life in general. So I think for us, our biggest challenge has been the fact that people have lost their jobs, and so who have a mortgage and don't have a job, what is the next step for them?
Yeah.
And people who have a job and they think they want to, actually go ahead and get approved for these relief and assistance programs. And our job through this entire chaos has been to educate, again, impart knowledge as much as we can so that they don't make the wrong decision.
And so like what's a wrong decision right now?
So, and I'm sure a lot of your listeners, they've heard this term so many times, forbearance.
Sure.
It's the biggest topic of discussion at this point in time for people who have mortgages. And and we request everybody to understand that forbearance is not forgiveness. I mean, we cannot say that enough number of times because there can be a loss in translation so quickly where a temporary relief can be mistaken for, oh, I get to skip 4 payments.
Right.
But what you don't see is what happens at the end of those 4 months. What happens at the end of that forbearance period, and that's where the real struggle begins. And so while there is a temporary relief, uh, the the way forward after that is not as easy as people might think. So which is why and you're aware of this, we started this group on Facebook called Real Estate Mortgage Forum, where we're trying to invite as many as people who, just to keep them updated as to what's happening, what are their options. If really you must resort to forbearance options, who can you get in touch with? Who decides the agreement terms? So we
Yeah.
put information out there for people to have access to, which makes things somewhat easier. Of all the chaos that's going on, and so that's the biggest conversation.
And so that group, the Facebook group is public, right? I mean, you have to
Yes.
join it, but it's for anybody. So the name of the Facebook group again. So in case someone's listening and actually wants to join, because this isn't Michigan only. I mean, obviously my market's Michigan, your market's Michigan, but anybody could find us, anybody could listen,
Yes.
and anybody could join, especially on Facebook. So
Yeah.
they find Facebook, they type in the search what?
Real Estate Mortgage Forum, and that's open to everybody. We talk about real estate, we talk about mortgages, of course, and most importantly, I mean, we are Michigan based, like you said, but we're also nationally. This is a global disaster at this point,
Hmm.
right? And so everything that we're talking about is very much relevant to all states. Yes, when you call your servicer and you want to find out about your relief options, the terms might be a little bit different. The duration of that assistance might be a little bit different, but that is across not just within Michigan, but it's across services across states. So our main goal has been to educate our clients and even people in general, and just
Yeah.
that don't unless you really have to, for example, both people in the household, they've lost their jobs, or they, God forbid, they have COVID-19, and it's just there is no way forward. There are other alternatives definitely that you can resort to than other than forbearance.
So what's a recommendation for somebody who they can get by, but man, they're really worried. I mean, like, it's tough. I've got X dollars coming in and I've got that same X dollars going out. And maybe in a month or two, that number doesn't work out anymore. No more 3,000 in and 3,000 out. It's suddenly 2,000 in and 3,000 out because maybe an unemployment number changes.
Right.
What do we do? Who do we call first? Whether it's our mortgage company or car company, what's your thoughts or recommendation? What do you hear?
I can talk from the mortgage point of view. I don't want to get ahead of myself and talk about other things like
Sure.
car payments and stuff. But definitely, that's the great perspective which we're trying to put out as well. And we're calling our current clients and anybody we're talking to, if you have income, you've taken a pay cut, but you still have a steady income to show. Before you apply for a forbearance, there are so many ways of doing this. For example, you can just refinance, right? If you've been on a 15-year and you had a great rate for a 15-year loan term, right? But at this point, you're getting a pay cut, you don't want to spend that much money, you can refinance to a 30-year right now, right? And that's going to get your payments down. You're going to save something every month, right? So every penny counts in this time. So it's okay, and that's the advantage of refinancing, right? You can actually use it to your benefit when you need it, and or there are a lot of people who can do a cash out refinance. They
Hmm.
already have equity built into their homes, right? A cash out refinance lets you actually take advantage of that equity where you can now take that money out and pay off your debts or pay your mortgage payment that you may think you may not be able to make it for the next couple of months. So there are ways to actually get around this situation. As long as you can show a steady income, even if it's with a pay cut, it doesn't matter. There are ways, there are alternatives, and when you talk to the professionals, um, they will really, really help you out if you ask some, questions and
Yeah.
put it all out.
Are you finding right now that credit specialists, some of the people that are really good credit repair people, and I'm not saying someone that you find online or on TV might not be, but someone that maybe you work with or your company works with, that when somebody has bruised credit and they need a little bit more assistance than what is your specialty, are you finding that those folks really know what to do right now? Or it's my belief that like what I did last Friday is not going to be the same as what I do this Friday. And so I'm sure that makes it difficult, but are they knowing and kind of like in tune with what to do this Friday if I go to them?
Credit is something. It basically just is. It is an indicator of how responsible you are with your money, right? I mean, obviously, if you have high debts and you don't know what to do with it, your credit is going to reflect that. So, in terms of credit repairing, the only thing that we can recommend is, uh, whatever, as much as you can reduce your debt, as much as you can pay off your debt, and that's again, it brings me back to and I'm not sure if you meant it in context of homeowners, but speaking in context of homeowners, is if you can do a cash out refinance, do it and get rid of as much debt as you can. That
Mhm.
is the number one thing that you can do for yourself at this point in time. Other than that, it's just be as responsible as you can. Don't bite off more than you can chew,
Yeah.
even especially in this market because it is very volatile.
Yeah. No, it's I was not in the industry when the market crashed, but I was actually in your seat when the market was good before the last crash. I was on the mortgage side, and there was such a difference between what led up to then and what's led up to now, as far as the crazy loan programs, the lack of equity. The only way someone did a cash out refi is if they had the home for a year or two. But then they could go to 100%, which we can't do now.
Wow. Yeah.
But the crazy stuff like that. But then there was other things that maybe it's hindsight, maybe the powerful knew and they didn't tell us. But one way or the other, there were so many other factors that just don't add up to what we've witnessed right now. With this is a health concern and problem, and I think I state this every time, and I'm going to continue to. We're not insensitive to those issues. We realize that those are out there and those are big deals. We're in the real estate world, so this is what we can control. And so when we talk about opportunity, we don't mean like thank goodness for an opportunity because thank goodness somebody's unemployed or somebody passed away or whatever. But there
Right.
are opportunities out there that are being put forth, and that didn't happen in 2006, 7, 8, 9, 10. The government didn't come in and help us with
Right,
money and loan programs. In fact, it it may have been around 2009, the first HARP program, and I don't even remember what HARP stands for at this point, but I know the A was assistance. Um, and then they had another one, but we were in trouble already.
right,
That happened because you were upside down and hurting financially. Whereas now they realize, like, today's unemployment number being another few million people, they know that these things are going to happen. So they're trying to get the money out if they can to as many
right.
people as possible to help. And so it's just a different scenario. But what are some good, opportunities? Are good loan programs available now? Have those gotten better or worse based on the government kicking in? Because when the government kicks in, it really is to benefit. But we think of benefit by meaning low rates, but really we mean benefit by you actually can qualify and you can actually lend us money.
Right. And so the government kicking in here is basically it's their effort to keep this economy afloat. Like this is we're talking survival at this point, right? We're not. This is not about um, where we're trying to profit and we're trying to really grow. We're just trying to survive this really unprecedented situation, which, like you said, in 2008 that was a bubble because loans were being given to people who had no income.
Yeah.
That's why starting 2010, so many regulations came in. That's why everything they tightened up all the processes to make sure it was a foolproof plan where they weren't just being given out to anybody that walked the road. Like the next person you saw, you're not selling them a loan. And I think that's why all these caps of 80%, and a cash out, or the brackets to sort of divide the interest rates, and how the credit scores affecting all of these factors. There's a reason why everything has been upped, from where it was before. Um, but at this point in time, the government stepping in is definitely helping.
Hmm.
Uh, the loan programs that were there a few months ago, the conventional is still there. Anything that is government backed obviously is taking a hit too, because uh, again, the government is trying to do whatever it can to keep all as much as they can, and keep it afloat.
Yeah.
So, like, there are a lot of loan programs that have stopped currently, and there are some loan programs that have become. I mean, there was a point last 2 weeks. If we had talked, the interest rate they were going nuts. They were adjusting multiple times a day. So if we were talking to a client, at 11 a.m., I wasn't sure if that was even available at 11:30.
Yeah.
So that's how much the volatility has taken over the market. But things are starting to normalize a little bit. We're back where conventional loans are still the most popular. That is still something that people can really benefit out of. But there are certain loan programs like jumbo loans, which have sort of taken a backseat right now, just because it's too much risk for the investors. And
And what's a jumbo loan?
but that
What's a jumbo loan?
a jumbo loan is anything above
Okay.
$510,000. So that's typically considered a jumbo. There are lenders out there in the wholesale where they've broken the jumbo into certain categories, which might be too complicated for this conversation.
Sure.
But yeah, conventional loans are anything that is 510,000 and less.
Yeah. And so, I think really what you're saying is, if I was in a fortunate enough scenario that I needed a $510,000 mortgage, it's probably out there, but I can't just go anywhere and talk to anybody the way that maybe I could before, um, because it's harder to come by. Like you said, people maybe are doing some fancy reconfiguring of loans and packages and stuff to make it work. So I'm
Right.
not completely out of luck, but it's certainly not going to be the walk in the park that maybe it was just 3, 6 weeks ago.
Right. So 3 to 6 weeks ago, there weren't additional overlays. And when I say overlay, that is basically the additional covering the risk factor. So that is a lender to lender basis overlays. Some lenders are they're more lenient to say, and then some lenders want to be more particular about safeguarding their own interest so that they don't get penalized in any shape or form. So those are called overlays, and I think that's the biggest difference that we've seen as well in the past 3 to 6 weeks, where a lot of lenders they have added overlays. They want to make sure that every loan they do, every loan they undertake, it is protected. And they're protecting themselves and the client. So like I said, verification of employment, for example, it used to be once in the process, and you move past it. So a month ago, it started when they were doing it at the beginning of the process and before closing, because even within that 2 to 3 week time frame, which is typical of any transaction, they weren't sure if this person was going to have a job. So they wanted, before they closed, they wanted a proof of employment with either the most recent pay stubs or being able to talk to somebody who would say, yes, they're still employed. So it's very unfortunate, obviously, what's happening, but at the same time, it's better to be safe than to be sorry, because there are a lot of penalties where if there's something called the first payment default. That's a big penalty for any broker or a lender if a loan has been closed and that first payment has not been made.
Right.
So, and those are things you don't know if you're not an industry insider. People
Sure.
just, well, and we had that conversation with somebody who had decided on their own that they weren't going to make their first payment. So when we were calling, our clients just to say, hey, everything good? Do you want to know anything? Any way we can help? And it just happened to be that conversation where they said, oh yeah, we're not making our first payment. And I'm like, yeah, not really.
Yeah.
Let's talk about it. So yeah. So and that is the biggest challenge too, Joe. People they make up decisions not being thorough with their
Sure.
diligence. And I think that's the key at this point in time. So we want to take this time and just tell them, like, ask questions. It's okay. Like, call your LO, call your mortgage professional you trust, call anybody, call us. And we'll be happy, even if we've never worked, even if we may never work together. But you know what? At this point in time, it's about safeguarding interest for everybody.
Yeah. Well, it's funny that you say that when you say like people make some of these decisions, because I think a lot of times they just got into their new home. They know that they're going to stay there and they're not going to foreclose. So they might think, well, I'll skip my first and then I'll make, a partial and I'll catch it all up. But, they think it doesn't matter because I'm not going anywhere for a while. And that's a short-sighted, view. And I get it, but I would highly encourage to never be so short-sighted, because I always think back to my own childhood where my parents bought their first home in Detroit. They bought it on land contract because they knew they weren't ever going to get to the balloon payment. Well, then the balloon payment came, so they got a mortgage. But that was okay because they knew they were going to move. And I moved out of that house before they did. And so, because of life things happen with injuries and sicknesses and things like that.
Yeah.
And those things eventually led to other, things, financial, burdens and such. And so, not only did I move out before them, I moved out years before them from what was going to be their first home. And when I help somebody find a house, I always, say, is this a house that you really could see yourself in for a long time? Because I know that you think that this is a first home, a step up, a step down, whatever. But what if it is your only home? You always have to make a concession, right? Even if you were
Right.
building a new home, unless you're a multi-millionaire with uncapped income, you're always going to have a concession. And so
Yeah.
when you make that concession, is that something that you're doing because you really didn't need it in the first place, or because you don't care now because you think you're going to get it later? If that's the case, maybe we keep looking. I mean, these are always unique scenarios, but and so I would certainly say on the mortgage side, these things sometimes stick with you for years. Again, I know they change. We've talked about that, but I can recall again when I was doing the mortgages back in '06, mortgage late was worse than a bankruptcy at the time, and it's probably like that now. Um,
Yes.
and so that was a big deal. And again, if you truly are in that scenario and you've already called and talked to, professionals and they've advised, okay, this is the best thing for you to do,
Right.
that's one thing. But before making such a decision, and maybe you don't really understand what the ramifications might be,
Yes.
reach out, because that's what we're here for, right?
Absolutely. That's so well said. And that was going to be my next point too, where we talked about the repairing credit, right? The worst thing somebody can do to hurt their credit. I mean, there are so many things, but one of the worst things you can do is if you can make a payment but you decide not to, and you're late on your mortgage payment, that can really hurt your credit. And that's something also we shared in the group. It can take a late mortgage payment for anything above 30 days is it can hit your credit score between 60 to 110 points. So
Yeah,
that's a lot.
that's
And
huge. Uh,
yeah, so
Again, this isn't about me, but I'll tell you that when we bought this house that we're in, we were 3 credit points away from a better mortgage product. And at that time, because rates weren't so low, they were decent, but they were, somewhere near 5. At that time, that was 1/4%. So
yeah.
we were 3 credit points away. So I can't imagine a 60 or 110. I mean, you're talking if you had an 820 going down to a 710, you're in a total. I mean, that's a good credit, but you're in a totally different bracket all of a sudden.
No,
You
I'm
know,
talking you're in a good bracket of 700 going to 600,
right,
and then you're almost near, absolutely unmortgageable, if that's
right,
the word.
yeah, well, right.
So, yeah.
So, I wanna continue on that, but you've made me think, and I've been holding off this question a few times. You moved here from India, so I'm assuming that you have family in India.
Yes.
How is this affecting family there? And I mean, it's a huge country, so I'm only speaking to your area, but how's that going?
Um, yes, so I moved here actually in 2011, and both my and my husband's families, they're back in India. They're also under lockdown, which is much stricter than what's here. So if people are protesting here, they would not survive a day back in India. I can tell you that, because it is a Herculean task to have a billion people stay put. You know,
Sure.
I mean, it's unfathomable to me at this point, but it's definitely tough. It's hard to think that knowing that you cannot travel if needed. You cannot go and be with your own family, and you're so far away. But you know what? Everybody understands, and it's just common sense. When you know this is what's going to save people, this is what's going to save lives. You just don't think twice, and that's and in fact, there are my brother-in-law and my sister-in-law. They're both doctors, so they're on
Mhm.
the front lines, and we hear stories which are very hard to imagine yourself, even to imagine yourself in their shoes. It's tough for sure,
Sure.
but they're managing it because everybody wants to be responsible, and because if the spread starts to take over back in India, it's going to be very hard just because there's a big strata of society which is very poor, and they live in slums where there is no sanitization,
Sure.
and there are parts which are very similar to. I was hearing an interview by Melinda Gates where she was talking about how the Africa numbers are ridiculous because there are no numbers because they have no health system. Who's keeping that?
Right.
We talk about washing our hands for 20 seconds every now and then. There is no clean water to wash hands with. So
Sure.
those are real world problems, and I think that's what people need to understand that you have a home, you have food, you're being with your family, and I think we all can be grateful for that, and because things could be much worse.
Yeah.
Something that a lot of people would realize.
Yeah, no, in a separate, listening, I don't know if it was a podcast or a TV interview, but there was a doctor who said along the same lines. He said, at some point, it almost becomes a case of the haves and the have-nots because the countries with the
Absolutely.
money to buy supplies are going to be able to protect their citizens, and the countries without the money to buy supplies are not. And then, like you said, they said the same thing. He goes, we're not going to know those numbers because there's not hospitals with
Yeah,
information. There's nobody collecting the data.
right.
There's just potentially collecting bodies,
Yeah.
and so it's definitely a whole different perspective on
Yeah.
things, so to
So
speak.
it's hard. I mean, I respect, when I see people protesting, I mean, and I respect all sides, everybody's hurting different in a different way and they express their hurt in different ways.
Sure.
And, we all can be respectful and agree to disagree. But it does make me think, like, if they knew what was happening in other parts of the world where probably people haven't traveled that much or they're not hearing that much about it, but we get to hear firsthand, what's
Yeah.
going on. It's definitely rough, and this is real. I mean, this is as real as it gets.
Yeah, for sure. So sorry for the little sidebar, but I kept thinking about it and thinking about it, and I was like, I don't want to forget to ask this question because
Absolutely.
I was really curious. But we were kind of talking about like the credit and forbearance and these programs and stuff. And one of the things that made me say I got to ask if Pallavi will do this, show was all the posts that you're putting in the Facebook group, and one of them about like another potential stimulus package and things like that. And I know sometimes you're not just sharing information; you're seeing it on a reputable site like CNBC or somebody like that, and putting it out there for us to see.
Mhm.
What do you know? I mean, like what's the inside scoop on what's coming or what's happening?
So here's what it was. When we started that group, like I said, we were trying to help out everybody. Even if it was something that we weren't doing, or that was a loan program that we are not into. But hey, you know what? We as industry insiders do have access to that kind of information that the general public does not. So everything is not just about homeowners and only that mortgage that we do. But as and when we were hearing, especially about the Small Business Administration and how a lot of people, they're small business owners, right? And uh, it is a difficult situation for them because it's not people haven't lost job because the economy went down. People have just lost job and the economy is going down all at the same time because everything has come to a standstill, right? So, um, and especially, and we did hear from a lot of small business owners that um, it hurt them that their employees are like family to them.
Right.
So not being able to help them or pay their salaries or um, you know continue their healthcare benefits, these are big deals. These are like a lot. We don't think that much about it until you are a business owner. It hurts to see your own family hurt. So I think it was important to share. And what we understand is, obviously the Small Business Administration is doing a lot of programs to help during this time. And PPP, which is the Paycheck Protection Program, is one of the biggest. And it's the biggest because it is allowing small business owners to get loans to continue paying their employees, their payroll,
Hmm.
continue the utilities for the cost to run that business if they were running in real life
Right.
for a period of 8 weeks. And it's a big deal because you want people to have the means to make it work while this whatever time frame is going to be. We hope it comes to an end soon, but whatever it takes, right? And and this particular PPP program is essential because it also may allow forgiveness of that loan. So they're giving the loan to the small business owners, but if they continue to pay their employees till the end of that 8 week period from when they are funded, and if uh, you know um, they apply for forgiveness, there are chances that they would be forgiven that loan for the 8 weeks that they have.
Yeah. So this is really funny because I try to think about these things in a non-political way, and it becomes
Mhm.
difficult sometimes.
For sure.
But with this one, uh, I just saw an article
Yeah.
again on CNBC,
Yeah.
and you may have seen it about the salon owner who called her employees on a Zoom call and said, "Great news! I got approved for the PPP. I'm gonna send you guys all your checks like usual." And they said, "No, that's horrible news. I'm going to make less money by you giving me my paycheck than I was going to get with my unemployment and stimulus money." And so she was at a loss because, and this is my interpretation of it, she was at a loss because she thought she was doing a great thing for everybody, including herself. And I'm not
Right.
obviously discounting the fact that she was doing it for herself, but this is how she pays her bills.
Right.
And and the employee pays theirs from her paying them. And so this was a scenario where the employees felt like they lost out. This could kind of be maybe a two-part question, but the first part being coming back to what you should do. If you're an employee and you choose to not come back to work, and let's just say it works out for you in the sense of you're going to find new employment or get back with your old employer, but
Mhm.
you can't get a loan, right? I mean, like if I'm laid off, even if I can show that I've got this guaranteed stimulus money, it's guaranteed as well as I do, and all this stuff, I can't get a mortgage until I'm back to work. Is that correct?
Correct. Absolutely. 100%. Um, if so, this is the thing too. Like, this is where just integrity in general steps in, right? That I mean, just like this story, I've heard so many stories where people who are starting to get their unemployment check, they think it's great. Like, I don't want to go back to work because I am getting more money, like you said, than I was when I was working really, really hard. But it's temporary, it's not going to last forever. What are you going to do then? I mean, it comes down to being short sighted again. Great, you're getting for the next few weeks, you're going to get a paycheck, and then what? You know,
Yeah.
if you're furloughed, if you're unemployed, you're ineligible for a mortgage. So if you want to move ahead in life where the interest rates are low, and that's the other big discussion that should you really be renting? You might as well, if your mortgage is the same or lesser, why wouldn't you become a homeowner, right? I
Right.
mean, that's a debate again, I think, for another
Sure.
conversation. But yeah, I mean, really, do you really, again, it's common sense. Do you really want to give up a job because you are making more money on unemployment, which is temporary? You
Right.
know, think about that. So,
Well, and I don't know what the unfortunately, the way that that happened obviously was the government wanted to get money out. And so they wrote this bill. I'm sure the bill's hundreds of pages long.
right,
And then they put it out and they gave the money out and they're sending checks now or deposits or whatever, which is great. But they didn't kind of foresee this issue. I don't know what the right phrase is, but it is a legit issue because if I was in that scenario,
right,
I would feel the same way. I'd say, why would I want to come back? I can make
right,
$400 more a week right now. That's $1,200 a month. And depending on what I do for a living, I might feel like I could just go do that somewhere else. But we can't get not just a mortgage. I mean, I have to imagine there's plenty of loan processes that do verifications that you can't do, including landlords. So, even if you're a renter, I don't do a lot of leases, and I helped a guy get into a unit, around Christmas time. And I got to tell you, it was a nightmare.
yeah,
I had to prove so much stuff to his landlord that I normally wouldn't have to do in a mortgage. And I don't just mean me, but me and my client. I had to
right,
get all this information. So, those are going to be concerns. So again, don't be short sighted. But secondly, is I'm guessing that if they don't take their pay or if they take it and then don't come back, they're really going to be up against it because typically speaking, unemployment doesn't count when you've quit your job. And
right,
if they allow you to, let's just say through June 10th, take this payroll, situation, but on June 11th, you can't, you will
right.
have quit your job. You're not going to get any unemployment. So, you know, I hope people are thinking about that. Again, I really wish that there were more people reaching out to other professionals and that people trusted professionals because let's face it, there's one thing that happens in a crisis is, like the smart sleazeball sometimes shows up and takes advantage of people. So, I'm sure that there's a lot of fear in reaching out to unknown folks, but that's what we're here for,
Right.
is to put people in contact with.
And also to add to that, Joe, a very important point that I was having a discussion with my husband the other day, and it was just a staggering number of people who are filing for unemployment. There is no system in place that's going to vet each and every application to say, really, are you really unemployed? Are you really
Mm.
affected, like you're saying? Because now it's not a regular application. Now we're talking millions,
Yeah,
right? And at this point, they're just trusting that you probably are because everybody is. So I think as hard as it may be for somebody, if they can make $400 more a week, then why would they settle in for their lower paycheck? That is a real situation to somebody, and but is it the most ethical thing to do? Probably not. But
right.
desperate times, they sometimes uh, sort of blur the right from the wrong.
Sure.
And like you said, that just go ahead and talk to somebody. You don't know what the repercussions of that might be once this all normalizes.
Yeah.
You don't know if you're gonna get a call and be like, okay, by the way, you
Yeah.
went in unemployment and it shows you were getting paid at that time. You never know when it's gonna come back to bite you. So
Well, I remember because they did start, let's to go back to the Great Recession with all the foreclosures. And at one point they said, well, don't foreclose because the company is going to come back and sue you and it's going to be on your record and all this stuff. And then there were so many that the advice was to just go ahead and do it if that's what you have to do
right,
because they'll never come back. And then
right,
suddenly in like 2012 through 2014, there was discussion of banks had 7 years. And now that they're doing well financially, they might start hiring people to go back after these foreclosures. So, we're talking like about stuff as if this is 1 or 2 or 3 weeks, but there could be things that happen over the course of years, depending on decisions that are made. And they're putting these programs out there to help, like you just said, they may or may not be forgiven, of the debt that they're given. They don't even know. So I get a check for 60 grand for my business, and I don't even know if I have to pay it back or not. So the same thing I have to imagine will happen on the other side.
yeah,
The government's giving out trillions of dollars,
right,
and it doesn't really matter who's in office. Nobody just gives out trillions of dollars. There's an expectation that it's for the better, and if it
right,
doesn't turn out for the better, then I'm sure there will be ways to make it worse. That's my guess. Just to
right,
my
yeah.
2 cents. So uh, I know that we'll get going here pretty soon. So before we do, I like to ask everyone at the end, like, what's good kind of come of being around the house more or around your family more, or what funny thing has happened or something?
um, the good thing that has come around is the fact that I have a realization about homeschooling.
For sure.
I have some, it's also new. I mean, I've always respected the teachers, but there's obviously a newfound respect for teachers. And it's funny, one of the teachers said to me, she said, well, you know what? I really miss all my students because my own kids don't listen to me.
Yeah.
So the struggle is real.
Yes.
And, but my kids, I think we all have been put in the situation where you just have to make it work. As much as it can get frustrating, but I think deep down, I'm glad that people are getting to spend time with family in a healthy manner. Um, but at the same time, I do hope that this new normal, is not the new normal because for kids growing up, they need that social development, and
Yeah.
that's something that will only happen when they're away from their comfort zone of their mom and dad. And I think that is something that I really hope and pray that does not become the new normal because Chromebooks and blended learning, and that's not going to help our children develop the way we want them to, grow up
Sure.
to be.
Yeah.
So yeah, homeschooling all the way.
Yeah, yeah, it's definitely been interesting to say the least when it comes to that. It's gone well, and I'll tell you, everybody always thinks virtual is the way to go, and I think that we also are seeing that's, especially when it comes to this, it's not. I mean, the teachers are spending two, three, four times the amount of time to produce very, I don't want to minimalize it, produce very little amount of work. Um, the time it takes them to put together these Google slides, I have a second grader, for just clocks to tell time, versus if they had a live clock in their hand, changed the hand around and said, "What time is it now? Whoop, what time is it now? What time is it now?" And actually individually ask and answer questions.
Right.
And so, I think that this virtual stuff is great in many ways. I'm certainly glad that we have cameras and Matterport tours for real estate. And I'm glad that we have had this now versus, say, in 1990, when there wouldn't have been an internet, and I don't know how we would have gotten information to the kids.
Right.
But I certainly hope that nobody thinks, we don't need a school building anymore, or we
Oh
don't
my
need
God.
an office building anymore, or we don't need, we absolutely do. Anybody who thinks that, we do.
Yes, we do. I agree. That'll be a protest I will be a part of happily. There were, we need the old school teaching back.
Yeah.
And
Well,
hopefully people can understand. But I'm glad that we have, you started this series, Joe. I appreciate it very, very much, getting this conversation out there, getting different perspectives out there. And I hope people can benefit from this and see what you and I and all other professionals who are going to be a part of this, have to offer.
yes, awesome. On that, I have to definitely say cheers again, Pallavi. Great
Cheers
to
again.
do this. Thanks again, and have a great rest of your evening.
You too. Thank you so much.
All right.